Good morning. This is a video for Friday, January the 24th. And well, the coronavirus certainly had impact on the market, but look at the volume. We have not seen volume like that in the Dow. I'm sure a lot of that had to do with Johnson & Johnson, Boeing, Apple, Google, anybody reporting earnings on Friday. NASDAQ was high, S&P 500 was high. There's a couple of other things to point out here. Let me see if I remember what they are. Unusual volume in the VIX. Now, this is an exchange-traded fund for short-term futures. So this is the volatility index. It's a derivative of the volatility index. And I'm not sure if it's a two times or three times fund, but take a look at it. Anyways, it had unusual activity. So for that reason, we're going to look at VIX. And here's another one with unusual volume, and that was foreign markets. Advancers to decliners, pretty much 3-to-1, and our stock market breadth indicator actually is almost down at its previous low. And as we said, once it breaks zero, it tends to go down into the oversold area. And this is the pattern that we were looking at repeating. Up to here, down to the zero line, shorter high. Up to here, down to zero line, shorter high. And both of them were followed by chattering, but eventually a convincing drop into the oversold area. And this is where we're going. This is where we're getting. Small cap underperformance is not over, and small caps tend to lead in the direction of the market. So just be aware of all of those things. Now let's look at the VIX. First of all, look at the spike in the VIX. This is the fear index, and both our momentum indicators are coming off of the oversold area, and there's buying in the VIX starting to take place. The VIX is a measure of the number of puts that are purchased on the markets and the equities. SPX pulled back, but naturally we expected it to, because it hit this, what we've explained in a video earlier this week, AB equals CD pattern. And that's enough to have people sitting at this value looking to sell. So no one should be surprised that there was rejection at this line. The coronavirus just helps to accelerate it. Look at this. We're making the closest point to the cloud that we've made since we started looking at it, which is back here at the end of November. We started to get a little bit out of control and quite a bit of ways from the cloud. So we're starting to pull closer to the cloud. And I do believe that we are going to have this contact with the cloud. Don't know when it'll happen, but if we just keep going flat and not moving, then we're going to contact the cloud. If we go down, we're going to contact the cloud sooner. Amazon down $4.64. Not good. Earnings are next week. Pay attention, because this week is just Apple, Google, Microsoft, Amazon, so many others. Caterpillar, Whirlpool. Caterpillar down 37 cents. The Chiku span is still getting support on the 50. It actually lost it, but finished the day right here. So did get support on the 50 EMA. Now we've got to take a look at Caterpillar possibly going all the way down to the 200, which currently is sitting at 136.72. And since I have short 135 calls on my 600 shares, I'm fully protected down, down to that value, and I'm eligible for the dividend that's going to be paid in February. Home Depot pulled back a little bit. AT&T pulled back a little bit. Tesla down $6. Again, because it's hit this 200% Fibonacci. You have to look at one of the earlier videos to see what that means, where that's drawn from. But it's 200%, so there are people looking at that, and there's a pullback. The analyst reports are just simply all over the place. I've got 4-star and 5-star analysts only. If I include the 3-star analysts, that's going to bring in Pierre Farragut, who's got an $800 target. But this is the guy who says there's a $150 target on Apple, and he has been a hold on Apple even as it was going up. In fact, I think he was even a sell on Apple at that point. So take that for what it's worth. TipRanks is a great site to ease your fears or reinforce your concerns with analyst ratings. UBS was the most recent, and they reiterated 2 days ago, $410. So take a look at Colin Lanigan later. Probably did a video on that already. WDC, got that already. So this covers pretty much everybody. Here's one that got away from us. You know, I owned this when I had short calls at 130 and lost my stock and never went back really to look at it again. But boy, what a beautiful stock that is. I bet you if we drew some Fibonacci's on there, we would start seeing a pullback. So this video is primarily finished now. I'm expecting a little bit of a bounce back on Monday, but overall next week, it's all going to depend on the earnings from the big guys. If they're strong earnings, that might override the corona fears. If the impeachment trial is over by Tuesday, who knows, that might help the market. I doubt if the market cares about that right now. It has bigger concerns such as fourth quarter earnings and the coronavirus. But if we were to do an extension on this wave right here, we would see, isn't this beautiful? We would see that Tesla hit 138.2% and $200. Both, not Tesla. Global payments, both round numbers where people like to sell. 200 is where people will place sell orders because it's a nice number. But look at all of that growth and the 138.2%. Let's keep an eye on this product. It's let's put it up here where we can keep an eye on it. And Shopify, again, it's hit its 138.2%, but it looks like it's come back now to test it. So it could be going further. Shopify is probably a stock that we could be looking at for call spread in the future. It's a Canadian company, by the way, and if you haven't noticed my accent, I am originally Canadian. Let's put that up here because we're going to take a look at Shopify in the future as well. Have a good weekend. Thank you very much for your support.